Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today here in Europe. I'm Caroline Hepker with Lizzie Burden, and we're joined by Bloomberg reporter Chloe Millay. Good morning. InPost, heavily shorted, but now might have gotten actually some positive mail.
Yeah, absolutely. It's a big move for InPost today, which is in the very exciting business of operating parcel lockers. It said it had received an indicative proposal for a potential acquisition of all the shares in the company. It didn't disclose any detail on price or on who the bidder is. But this was exciting enough to really get the shares jumping this morning, about 20%. So InPost, as you said, has been one of Europe's most heavily shorted stocks, and its shares fell about 37% in 2025. But then yesterday we had a big boost in the share price, about 11% boost, because which was seen as a sign that short sellers were closing out some of those bets. So it's been a really busy start to the year for InPost, but we'll be keeping an eye on developments with this potential deal. As mentioned, we still have no detail on price and buyer, so the market will be very interested in that once we start getting some of those details.
And it seems like the UK retailer Next got what it wanted for Christmas, Chloe. Why?
Yeah, absolutely. Next did quite well over Christmas, which tells us something quite reassuring about the UK consumer, perhaps, given that Next is widely considered to be a bellwether for the UK high street. So it boosted its profit forecast for a fifth time this financial year. It said that sales were really strong over the holiday period, and that also includes the UK, where growth was expected to be much more muted than it actually ended up being. However, there's always a but with these things. Christmas period was strong, but that doesn't mean that the rest of 2026 will necessarily be the same. Next warned that profit and sales would grow at a slower pace in the year ahead, and that is primarily because of rising unemployment. So, of course, if someone is unemployed, that means that discretionary spending, like clothes, is going to be the first thing that goes out the window. So Next is usually quite cautious with its guidance. That perhaps explains how it was able to lift it 5 times this year, but it's worth keeping in mind that cautious tone and not getting too excited about the prospects for British retail in 2026.
Yeah, interesting. Okay, so that from Next, which is one of the big high street bellwethers. Shoes come in pairs, and for Adidas, so do downgrades. What has happened?
Yeah, Adidas was double downgraded by Bank of America. The analysts have said that they expect lower growth for the company going forward. Also said that investor interest in that sector was really starting to wane. What some might say is quite harsh. They said that the company's brand upcycle was old news. So that maybe seems to indicate that the company might not be able to kind of always ride the wave of consumer enthusiasm for its retro sneakers, which was really what has been driving the growth over the last couple of years. And this comes just a few weeks after Nike, which is obviously the most direct competitor, warned that sales would also take a hit for them, with a weakness in China in particular. So it seems that across the board for those sportswear stocks, there's maybe a lack of catalyst going forward and some weakness that we need to take into account.
Oh, I've fallen for the New Year resolution. I bought a new pair of trainers. You ladies are going to have to keep me on target then this year for actually using them.
You can never have enough shoes, Caroline.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.